Good morning, everyone. We couldn't do this conference without talking Brexit. I'm really sorry, but we couldn't do it. I think we managed to avoid it for most of yesterday, but we've got an absolutely fantastic panel, not least in the light of some of the recent events, yesterday's events, which we're going to get straight into. So please can you welcome on stage Carolyn Fairbairn, the Director General of the CBI, and Rachel Kent, partner at Hogan Lovells. Great. Now remember, this is a tech conference, so get tapping the app. I need your questions. Otherwise, it's just going to be us talking on stage, and that wouldn't be very democratic right now, would it? So we sit down, Caroline, together, literally the day after a tentative agreement, it looks like, on transition. You were saying to me this is actually your first opportunity to talk to an audience since yesterday's deal. Now, the CBI has been pretty critical of the approach so far. Are you pleased about what we've seen yesterday?
Broadly speaking, Iain, yes, we are. Yesterday was a good day in the Brexit process, I think for two reasons. So the first is we know how many firms have been contingency planning for a hard Brexit. You know, the fact is hope is not a strategy. We know that a lot of firms have had to hope for the best but prepare for the worst. Our latest survey had 25% of firms watching March. And if March had not delivered transition, they would have pressed the button. So this was a genuine gift of time yesterday. It was relatively uncaveated. I think we were all looking for whether Ireland was going to be a showstopper, whether Gibraltar was going to be a showstopper, and they weren't. So that is 20 months of time, and that is genuinely valuable. But Iain, I think that there was something potentially even more significant yesterday, and this was, I think, the first time we have seen pragmatism being put ahead of politics and ideology. So a year ago, we know actually both sides had ruled out transition. I know that because we were amongst the first people to suggest it. And here we are with economics and prosperity being put first. So there's a lot more still to do. We know that actually for some sectors, and actually FS is one of them, the transition deal is not legally watertight enough to be completely the thing that is needed, but it's a big step forward. We now need to have this same approach applied to the Irish border, to the final deal, to services, to people. Scottish fishermen too, it appears, are not terribly happy. I mean, there's a chance that this just doesn't happen. I mean, that EU approach, which is it's not agreed till everything is agreed. So what should businesses do right now, particularly heavily regulated businesses, which are kind of the people in this room? You are absolutely right. So the risk of no deal has not completely gone away. You know, let's be absolutely honest about this. This is not legal text, it's not signed. But I think we all watched yesterday, interestingly, the mood music. And so much is in tone. And this did feel like a commitment. Now, we know that there are some sectors who are genuinely very unhappy, Scottish fishermen being one of them, and that is going to be, there's going to have to be worked through. But in terms of progress, I think we call this a milestone. This is the first time we have actually had a decision that has been based on, as I say, pragmatism, economics, keeping free trade going, protecting jobs. The first time we've had that step forward, I think, frankly, in the year and 9 months since the referendum was held. So, Rachel, you advise firms, and what would you do right now as a firm? We've seen this much better mood music, bit of love-in between Barney and Davis. Well, the closest that Barney and Davis are going to get to a love-in, let's be honest.
I'm not commenting on that.
What would you do as a firm right now when you need to make passport and supply chain decisions?
Now, you know me to be an optimist, Iain, and you started me off with a question where I have to start with a word of caution. I think the first thing I would do this morning is swallow my extreme frustration that, as Carolyn has said, transition suddenly feels, after a sort of a while in the desert, in the wilderness, suddenly feels like something we might be able to touch and might become a reality, almost inevitably will become a reality. But of course, no legal certainty. And whereas if you're making an investment decision where you stand to lose money, which is one thing. The position firms are in this morning is that if they take their foot off the gas, so to speak, in relation to their relocation or contingency planning, then that could have very serious consequences indeed, if in fact it turns out that the Irish border or one of the other significant and complex issues means that no transition deal is ultimately done. So to answer your question, once I'd got over that frustration, I would look at taking the most measured, proportionate approach to my relocation plans that I could, so as to be absolutely sure the cliff edge is not awaiting if all goes wrong.
Okay, so you've used the relocation word. I mean, there are many people in this room that are doing just that, but doesn't proportionate mean, for a lot of people, the least that they need to do right now? What does proportionate mean for the sector?
I think what proportionate means is that people might, sometimes if you move X, you might wish to move Y with it because it makes sense rather than because you have to. So I think it's those kind of decisions that this enables you to think about. So as a regulatory lawyer, though, I think I would say that what I don't mean is put one man and a brass plate in Luxembourg and leave everything else in London. Clearly that is not going to get you over the regulatory hurdles that you'll have to satisfy if things don't go well.
I mean, what are you seeing, Carolyn? Is there a real difference in terms of your membership, your voice, between highly regulated firms and those that don't have that same level of regulatory intrusion or indeed need for the passport?
There really is. And we are, if you are risking a legal breach through not being ready for a potential hard Brexit, you have to think and behave very differently. If you are, the non-regulated sectors, frankly, I spoke to many of them yesterday about how they were feeling. They can take more on trust. And I think, the point Rachel is making, that quite a lot of the decisions are actually not binary. They are about no regret. They are about incremental. You can do that much more easily in the manufacturing sector around the supply chain changes you will make. So we are seeing a difference. And I think what it means now is we just have to be pushing as hard as we possibly can for regulatory certainty for the regulated sectors. And actually, I think the instructions given to regulators across Europe about forbearance, which is not yet in place, is going to be absolutely crucial.
Let's dwell on that. Rachel, come in too, but let me ask Carolyn on that. That's really what firms need right now, isn't it? The regulator, we all know the regulator needs clarity from the politician before they can do anything. Now, this is filled with fuzziness. It's not filled with clarity. What would you hope to see in terms of regulatory guidance? In fact, what are you pushing for at the CBI in that regard? Well,
I think there's short-term and long-term. So I think on the transition, we do want this regulatory instruction, air cover, if you like, from the politicians to the regulators across Europe to treat the transition as something that is very likely, if not certain, and that we will be pushing for. In the longer term, so we're going to move quite quickly now, I think, into the final deal shape. This fundamental opportunity to have a model of regulatory alignment, particularly in services, to safeguard access, is where we need to go next. And I think what we want to see by October is the shape of that, because only that really gives the long-term certainty that our services industries need.
So, Rachel?
Yes, I think I'd certainly echo the regulatory alignment point going forward, but I guess just sticking, actually on alignment, absolutely. We want to preserve access. We think that if you like, the price of access is regulatory alignment, clearly has implications for the sector in terms of how laws are made, when laws are made, going forward. And that clearly, for an industry like our industry that relies so heavily on innovation, if you like, then the issues around alignment and how closely tied or indeed even being a rule taker that some options would trigger, are really very vital. I didn't answer.
So you wrote the book for us, for the International Regulatory Strategy Group, and I think many of us in this room owe Rachel a huge vote of thanks for the work that she's done on mutual recognition. In fact, probably one of the most successful pieces of work, pieces of lobbying, and I say that as a lobbyist, I've seen in a very, very long time, in that it's the starting point for the government's negotiated stance for financial services. It's one of those three buckets. And for financial services, they're arguing for mutual recognition. Okay, let's be honest. We've already heard from Brussels this morning on the back of yesterday. They're talking equivalence. They're not talking mutual recognition. Talk about the prospects for success.
Okay, so just to clarify, in my view, equivalence, frankly, is the most frustrating word in my current universe. It means lots of different things to different people. I think equivalence goes with something called the third country regime, a different regime already in existence, but not for a country like the UK that has such a huge financial services sector and is so heavily entwined with the EU. And I think that that's what most people mean when they say equivalence. So yes, they're talking about equivalence, but I think the difficulty is, even when our own Prime Minister and Philip Hammond were proposing our deal, they threw the odd equivalence with a little e into the conversation. I think that confuses things.
So the politicians are being inexact with their words at this end of the telescope, not just at the Brussels end of the telescope.
No, both. I think lots of people confuse the matter. So when they say you'll have equivalence, I think sometimes they use that term colloquially, so to speak, to mean regulatory alignment. So one issue is I'm frankly not very clear on exactly what was meant this morning. But I would also say, and we've had a history of this, I mean, as Caroline has just indicated, we both, probably all of us, have been ridiculed for suggesting there should be a transition or there should be a deal in the longer term providing mutual access. And that's largely because we're in a negotiation and you don't go into your negotiation with your bottom line, so to speak. So I'm not concerned about that statement. And what I would say, lots of people across the city, both in government and industry, have been working very hard to lobby in Brussels, but also with the EU 27, so focusing on central banks, regulators and finance ministries. We've been talking directly to them about our proposal and what it would mean. And what I will say is that Carolyn used the word pragmatic, and I think that's good. We've been using the word the economics of the situation, yes, if you like.
Okay.
And I think everybody across Europe agrees that economically speaking, a deal with the least possible friction for financial services providers is in everybody's interests, not least the consumers of our financial services. Large EU corporates who wish to raise money in London, for example, are best served by no friction.
Lift the lid on that for us a little bit, Carolyn. You spend your time in Westminster and Whitehall, like me. You spend your time on the Eurostar, like me. What do you think business is calmer? Do you see alliances that are starting to emerge with the German business federations, with the French business federations? Are you seeing any kind of realness about the economic potential for economic downside that is starting to bring business organizations together across Europe?
I really do. I really do. And I couldn't agree more with Rachel's point about the negotiations being played out in the headlines. And we just need to recognize that people are going to have positions that play out in the press. The real negotiations, I think, are going to not start, frankly, for a little while. And that pragmatism is really, really growing. It's very interesting, just taking the transition example again, because I think it is so powerful. We know that business organisations, BDI in Germany, my opposite number in Germany, has been very vocal about the value transition to German business. That has helped enormously. At any point where the Commission started to try and say, well, this is a favour to the UK, we know that they were hearing from BDI in Germany saying, no, we need this too. We can use that. And actually, I think it's a message, in a sense, for all of us with networks across Europe. We hold the relationship with the other business organisations. We meet them every few weeks. We speak to them every week. We can use this, and it will come. The point about financial services is the city is the banker to European corporates. It has raised the majority of debt. The capital markets are deeper. They know that. And I think that is the mutual interest argument that we need to bring in more and more strongly over the next few months.
Okay, let's make this much more democratic now. Some of your questions that are starting to load up for me. Forget the EU and forget Brexit for a moment. Oh, if only, ladies and gentlemen. If you were starting with a blank sheet of paper, how would you make the UK as competitive as possible to be able to compete with the US and indeed the EU? What rules and regulations can we put in place to increase competitiveness? Carolyn, do you want to start with that?
Oh, what an enormous question, Iain, for the last one. I mean, but it is a fantastic question. And I think that's what this is all about at the moment. As I'm going around businesses across the UK, more and more, actually, they're wanting to talk about the things that really matter for competitiveness. People, skills, talent, innovation, the infrastructure environment of the UK, the broadband digital infrastructure. So I think the biggest opportunity we've got now is to swivel and to start really focusing on those things. And for me...
So no more Project Fear?
I think this is a moment. What have we got in terms of the backdrop? Global growth is going to be over 4% this year. The UK is incredibly well positioned. We have 3 of the top 10 universities in the world. Many of our universities in the top 100. We have a flexible workforce. We're in the right time zone. We have a rule of law. I went to China with the Prime Minister in January. The Chinese investors look on the UK as an extraordinary place to invest, and that is true in many countries. So I think we need to be seizing those opportunities. Right. We must not get so waylaid by Brexit that we don't get the foundations right, and that's the opportunity.
I'm feeling more optimistic. I hope you are as well in the room. Now, Rachel, I've got a very specific one into your world. So whilst the transition deal has been announced, what do you think would be the effect on passporting for financial services companies? What can you see out of yesterday around what changes we might see to passporting? Or frankly, hasn't the Prime Minister just ruled out passporting anyway?
The Prime Minister has indeed, in her speech, ruled out passporting. And I think passporting has a very particular meaning under the Single Market Directives. But our proposal provides mutual market access, which you might say has a lot in common with passporting. In the sense that it continues to facilitate the obtaining of a license in one European jurisdiction, let's say the UK, and the ability to use that license across the rest of Europe. That aspect of passporting, if you like, remains a key element of our proposal. And I think the transition discussion clearly is about transition and not the future deal. So there wasn't anything specific about that. But I want everyone in the room to be reassured that just because people say we don't want or we can't have passporting does not mean we can't have frictionless trade between the two sides under a trade agreement in the way I've envisaged.
Okay, we're coming towards the end, and a question that is getting a significant amount of likes, so democratically I need to ask it. So we've just been listening to Nick Clegg, and Nick says that he still wants another vote on a final decision for Brexit. Are we too far down that road now to make any significant changes? I mean, both of you are sounding a lot more optimistic about the possibilities today. Should we have another vote?
I'm afraid I don't think that is the job of business to make the political decisions. That will be up to Parliament. What I would say, though, is that we do need that kind of constant going back to what is best for the economy, for business, for jobs. We haven't talked about the need for access to EU talent. I think that's absolutely fundamental. These are all the things that we need to get in place. And then there may well be a vote, but let's have it on the basis of the evidence and economics, not ideology.
And you're very happy about yesterday, but you were arguing for this 9 months ago, so we've wasted a lot of time, haven't we?
We'd love to have had it 9 months ago. All I would say is there is something about the timing of the political process. We talked earlier about the fact that this has been broadly welcomed. It may not have been broadly welcomed a year ago, and this is about building consensus, and that's, I think, what we can build on going forwards.
Rachel, final word.
I can absolutely promise you that I have not been in a meeting within Brussels or in the EU27 since the referendum where the first question has not been, can we overturn Brexit and can you stay? That's certainly their view, and so we're asked that question a lot. I would give you an answer. Caroline mentioned the Lord Mayor, and I was in Spain and Portugal a few weeks ago with him, and I asked him how we would deal with that question, and he was very wise on the subject and said, all we can do is play the cards in front of us. If we don't play the cards in front of us, we risk not protecting our downside. So there might be some hope, but I think we have to focus on making the downside as good as it can possibly be.
Very good. Well, I don't know about you. I hope that's made you feel a lot calmer. I've been in many Brexit sessions over the past 2 years, and I have to say my heart rate races and I get even more anxious. Hopefully this has been a calming, soothing experience for you this morning. And I'm also, along with Rachel, delighted to be part of the launch of Innovate Finance and City of London's new FinTech strategy group. And Brexit is going to be the opportunities and indeed the challenges from Brexit are going to be absolutely top of my priority, chairing that group. So I'm kind of listening into what you guys have to say about those opportunities and challenges. Time is up. Can you just join me in thanking our brilliant panel, Caroline and Rachel?